Hey guys, it's me, Dana Coleman with Century 21 New Millennium, the core team, where we create exceptional experiences that transcend the real estate industry. I think we got a big surprise for you guys today. You thought we were coming on at 5, and we decided to come on at 4:50 because we want to give you something good before we get started. We want to make sure everybody is online and excited. I'm so excited. I'm tripping over my words. I'm going to bring on our special guest, our first special guest, Ebony Nunnally, none other than one of the best real estate agents in Charles County, PG County, Maryland, DC, Virginia, woo, woo, Virginia, honey, she is showing off all over the globe. I want to invite her on because we're going to talk about some myths that are shared with home buyers, and we want you to be educated today. We hope that this entire broadcast is something that will change the whole trajectory of your life and that you will get excited and on fire about 2021, being able to secure your credit and being able to secure your money. I'm bringing on Ebony. How you doing, Ebony?
Hey guys, I'm doing well. Can you hear me good?
I can hear you very well.
Wonderful, wonderful.
Everybody's excited today. I've got both of my special guests, two of my other special guests already in the queue, ready to share. So we're going to be as quick as possible. We're going to take about 7 minutes. We're not even going to do all of them, but we're going to do a couple of them and get everybody all excited. But before we get started, we want to make sure that you are excited about coming online tonight and learning about how to get yourself together to buy your home. Whether it's your first home, your second home, your dream home, or your forever home. Ebony and I are here to assist you, and the core team is here to assist you with all of your real estate needs. Our number and our email is across the bottom of the screen, so feel free to make sure that as we move forward, click like, click share, because this is information that you have got to get out. All right, here we go. We're going to start today, and we're going to talk a little bit about 7 myths about buying a home. And I guess I'll kickstart us, Ebony. I think the first one, we all know that it's an American dream for people to buy their first home, and we're excited and probably both have experienced purchasing our homes, and a lot of times before we get started, we all know that there are those naysayers, people that have the answers, have never owned a home, never even probably barely rented a home, renting out of rent money, and they trying to tell us what we need to do
how to buy a house. That's right.
To buy our homes. So here we go. Myth number 1 is you need, get ready for this, a 700 plus credit score in order to purchase your home. Now, we would love, don't get me wrong, I think the lender that's coming online tonight will be very happy to agree that we love those
absolutely
higher than 700s. But it's a myth to think that you have to have a 700 credit score in order to obtain a mortgage loan approval. Moreover, with the availability of federally insured mortgages like an FHA loan or a VA loan, you do not need a perfect credit score to qualify. However, the higher your credit score, the better your interest rate. So it's important that you weigh the cost of moving forward now or wait until your score improves. Come on, Ebony, help us with number 2.
With number 2, you need 20% as a down payment, which is not always true, and they do have many grant-funded programs that would allow you to use money that you don't have to pay back in order to have a down payment. It does not have to equal 20%. So the money that you put down for home purchase, the better off you'll be in the long run. So the more you put down, the more, the less your payment will be, or, you have a better chance of buying more home when you can put more money down. But plenty of affordable mortgage loans are available that offer down payments as low as 3% of the purchase price. Dang, that says 3%, not 20%, doesn't it?
Yeah, that's right.
That's 17% difference. When searching for a lender, inquire about down payment programs or check with your local state or housing development authority to see what's available in your area. And again, that goes back to the grant funding that is allotted to those who qualify that will help you with your down payment.
Absolutely. Absolutely. Now, myth number, thank you, Ebony, that was amazing. Myth number 3 is if you get denied, you are done. We're going to skip that one because we're running out of time. We got 2 minutes. The myth number 4 is it's not the right time to buy. Oh my goodness. Our mortgage lender will probably give us a little bit more information on that when he comes online a little later. But I wanted to hit this one. Renting is cheaper than owning. Renting is cheaper than owning. Number 5. Well, that's not true, honey.
No, it's not.
Renting, it costs you a lot. It costs you noisy neighbors. It costs you people banging above your head. It costs them turning off your heat in the summer and air in the winter. Women, special women who are going through the seasons.
Not the season.
Yeah, right. It costs you going outside your door and going all the way a half a mile to get to the trash can to dump your trash. It costs you, parking that Mercedes apartment building and worried about somebody scratching up your car.
Yes.
So the list goes on and on and on. However, let me tell you something very important. Renting is not cheaper than owning because when you rent, you're paying for somebody else's mortgage.
Yes.
So if we put all jokes aside, you're paying for somebody else's mortgage, and you're not investing. You're not investing anything in yourself at the point of leverage for you in this particular field. Number 6, can you help us out, Ebony?
Sure. So people aren't selling homes during the pandemic. That is absolutely incorrect, isn't it? My husband and I had a long conversation pertaining to his business not slowing down because more people are purchasing during the pandemic.
Yes.
So where it says that recent studies suggest that 77% of potential home sellers are planning to sell their properties following the end of the stay-at-home orders. Many don't want to wait, so they put their house on them, and some of them are getting more than what they asked for.
Yes.
Price. That's a win-win. So it says with a safe self-service option becoming more available, more sellers could start re-entering the market sooner. Realtor.com is a good one. Found year-over-year declines in new listings are continuing to improve, only down 20% with more sellers returning to the market. So that's definitely a myth.
Absolutely. Amen, sister. Well, next, what we want to do is we want to go to the final myth. Ooh, we're doing good time, girl.
I love it, yes.
Awesome. So here we are. It's unwise to buy a home without visiting it in person. Come on. Me and Ebony talked about this one and debated about it. We were going to add this one. Listen, guys, people are buying houses and they are military. They are overseas. They have excellent agents like the core team. We actually added a new area into the core team where we will actually tour your homes for you. We'll do the virtual tour to make sure that the pictures are as beautiful as they look on the screen. So we really wanted to definitely talk about this. It may seem a little strange because in the olden days, people got to see it, but that's because we all kind of stayed in the same area. But this area is such an area of migration that people are coming in and out and in and out. We have all types of new vendors coming into the area, military installations coming into the area. And it's weird, right, Ebony? It's kind of weird to think about that, right?
It is. And where we are in Maryland, there's a lot of people who are there for short periods of time, and so they move in and move around quickly.
But believe it or not, statistically, visits on digital tours are on the rise. 25% more people are taking virtual tours than before, and 41% increase in remote communication with agents. Hey, I sold several houses this year where my people were out in Florida, and we were here. So guys, don't believe the hype.
No.
Ebony, listen, I want to thank you for coming on today. You are amazing. You are awesome. And guess what? I'm going to put you in the queue. If I see you, put your hand up. I'm going to bring you in with the guest. Okay?
All right. Thanks for having me. Love you, girl.
All right. Be safe. Ebony was not driving. I promise you, she was pulled over on the side of the road. We made sure she was safe. SAFE. Now on to the next, who is the best of all the rest in credit, curing people's credit. The one of the love of my life, who has taught me so much in such a short time. I am an avid learner, and in all thy getting, get knowledge, get wisdom, get understanding. I am introducing to you Corinne Hamilton. She is amazing. She is a native of Brooklyn, New York. Of course, she was raised all over the place because she has a military background. She lives her life to the fullest. She travels, she models, she writes books. Guys, let me tell you something. She is a new and modern superwoman. She embarked on a personal life shift recently, and she and two friends practiced 30 days of intentional gratitude sharing, which eventually resulted in 365 days and culminated in a literary work on appreciation entitled A Course in Gratitude. A Course in Gratitude. It's nothing like it. Here we go. She is currently supporting dreamers with realizing and achieving their personal financial goals by improving credit scores and providing other financial strategies for all her clients at Cure My Credit Scores. Guys, let me tell you, I think I've said more than enough, but there's so much more to this young woman. She has blessed us on so many levels several times, and we're going to bring her on live now so that she can discuss and help us through securing your credit. Hello, 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 hello. Oh my goodness. Virtual hug to you. Virtual
Oh
hug.
my God, virtual hugs. I tell you what,
Yes,
you got
yes,
me feel
yes.
like I want to see Corinne based on that introduction.
And as it should be, as it should be, as it should be. We're so glad to have you here today. If you could just
Thank
give us
you. Thank you for having me. I always love your
1
energy.
minute, give us a little 1 minute on your just your personal testimony on how you started helping people with their credit.
So I came looking for a job and graciously was afforded the opportunity to be here to support people. But then while I was here, I was like, I'm talking to people about their possibilities, and my credit score was a 589. So I was like,
Woo!
that's a little inauthentic. So let me see, what I can do. I asked, can I join the program even though I work here? And of course, they were like, yes, of course, Miss Benita. And so started working on my credit, started the journey. Fast forward through some good advice and some hard work, and I was able to get my scores up to a 755. And very short period of time, like 5.5, 6 months. And so I was really proud of myself, but more so, I've had them up there for over a year. So that's what I love about our team is we're passionate about credit education. And so you just don't have to get there and flail and get your house and then, not be able to maintain it. We're going to support you with life changes, transformation, where you can maintain those scores and get the things that you want.
Yeah, wow, wow. That's amazing. And I'm so glad to hear that. Every time I hear it, I get more and more excited about how your journey started and how it started with helping you, and then now you're helping millions of people reach their credit goals. So while we wait for people to get online, and guys, make sure you comment below if you have any comments. Comment below, give us some hearts, give us some likes, show us some love, share, because this information is very important. What we want to do is we want to ask her just a few quick little preemptive questions before we get into the nitty gritty of credit. So there are a couple of things that I heard people chatter about when it comes to credit. And I think the first question that a lot of people ask is, what is the difference between hard and a soft inquiry on your credit? What is the difference between a hard and a soft inquiry on your credit? Help us out.
So that's a great question. So a soft inquiry, the best way to describe that would be when you get all that junk in the mail asking you to join, get a Capital One card, or Amex card, Discover card. Those are soft pulls. So they're say pre-approval. The key word to a soft inquiry would be a pre-approval, some type of pre-approval of sorts. I've gone to Verizon and they say we're not gonna I've gone to Verizon and they say we're not going to pull for real. We're going to do a soft pull first. Soft pull, soft inquiry will not show up on your credit, okay? But they're also not going into the nitty-gritty of your credit. It's just kind of an idea of where you are. So if you're purchasing a home, if you're getting an actual credit card, if you are getting a car, applying for a car, then you're going to have a hard inquiry, and they legally have to put that on your credit. So that's the major difference between a hard inquiry and a soft inquiry. And you want to have as few hard inquiries as possible.
Got it. Got it. Okay, that's good. That's a good one. Now, question number 2 is no credit good or bad? Oh my
Thumbs down.
goodness.
There's
I
a
love
no
it.
like button for
I
that.
love it. It's not
So
good.
I'm gonna put that into some context. It's really not good for most of your goals. Okay, so you can have decent credit without well, let me be specific because that's without a credit card. But having no credit, there are things where you want to leverage. I don't know, because you, even if you have money, people want to, your credit report is like a book, so people want to see that you have a story that shows how you leverage credit in the world. So
Okay.
unless you're buying a house for $200,000, $500,000 flat, if you don't
Okay.
have a story about the credit, then you then can't uh, advocate for that. You're asking for credit, but you don't have a credit portfolio, basically.
Wow.
Now, if you want to do cash and you got a cash portfolio, okay, fine. But you need a credit portfolio. You need to show that you've paid on some cars and done some different things. So it's not a good thing if you're looking to buy things on credit because you have no performance history. It's like having trying to get a job as a doctor and you have no doctor stuff.
Oh boy. Oh boy. Well, that's a whole nother topic for another day because you know we got
Yeah.
a lot of that going on in America, honey. People dressing up like doctors and doing all types of injections and outjections and all types of
Yeah.
in
Yeah, you
hotels.
need to have a little bit of experience, a little bit of credibility, a little bit of a record. And you know, when you get a doctor, you want them to have some, not the first time you delivered a baby. That's kind of the same concept on your credit. Like, not the first time you've leveraged paying things back.
Okay. Okay. Got it. All right. Well, that's definitely a good answer. And I think that, that's a good question for our millennials because I know my children always say, oh, my credit is fine. I don't have any credit. And I try to encourage them, you that's not good. No credit is bad credit. No credit is bad
Yeah,
credit. Somebody can
it's
tag
bad
them.
credit.
Credit is bad credit.
No
So
credit is bad.
they don't really know if they can trust you. That's just like giving somebody the key to the car and they haven't been to driving school.
Exactly. Yeah.
They don't have that piece of paper. So I'm following you 110%. Come on with the questions. I'm not seeing any
Yeah.
questions yet. I don't know if people are online
And
or
if you
not.
literally have no credit, then when they pull your credit to buy a house, it has a code on it. Now, there's a difference between no credit and you have a 400 and no
Okay.
credit, literally don't have credit. It says L3 or something like that. Not enough information to pull a file. So you literally don't have any scores, not low scores. But what's interesting? I think you just brought up is that people think when they don't have credit, they have a 700 because they don't have any problems and they did not pay anything late and they never had a credit card. So they have like a 700-800 credit score. No, that's not how any of that works.
No, ma'am. No, ma'am. Well, that's definitely a nugget and a diamond that we needed to share with the general public so that people can understand that this is serious business and credit makes the world go round. Credit makes the world go round. Just like doctors and just like lawyers, people who help people with credit will always have a job because there's always going to be, I mean, millions and trillions of people in debt in a negative way. And people like Corinne, guys, before we really, really what we're talking about today, people like Corinne will help you dig your way out of the pit. Some of us are in pits. We can't figure out how we get in. We took all those soft credit cards, and we just started taking. We just started accepting all of them. We just started accepting all of them. You know, I think I got in the mail like maybe 30 different pieces of mail from the same company, and I already had a card, but they want me to get 5 more, 10 more, 20 more, 30 more cards. Of course they do, because they want me to be indebted to them for the rest of my natural life. So we have to take control, take the bull by the horns in 2021. Oh my goodness. You know what? Happy holidays.
Same to you. Same to you.
I'm sorry.
So beautiful time of year.
I missed that. I missed that boat. I'm so sorry. But yes, we must.
Oh, we got a question. We got a question.
Oh, we got a question. Okay, all right. I'm sorry. Let me go. Let me go look at the questions. I don't see the question.
What are your thoughts on adding someone to your credit card to build your credit?
Oh,
that is a great question. So here are my thoughts. That is a wonderful idea. That's a great way to build credit. I just recently did it for my daughters, and I wanted to interject that when you said something about your kids. I have clients, young clients. I'm 48, and I have 20-year-olds and 19-year-olds that come ready. And unfortunately, a parent has what do you call it? Extorted their credit for light bills and things, and they have terrible credit and they've never applied for anything. The opposite of that, I added my daughter to my card. She was in the 500s. She doesn't have a lot on her credit. It went in the 600s. And then we leveraged that and got her own cards after putting her on mine. And now she's in the 700s. Okay. So it didn't take much to build her up because there wasn't a bunch of junk to get off. So same thing goes for whatever stage you're in, building, beginning, you've had it for many years and you have some issues. Rebuilding, you can be added on someone's card as an authorized user. Really quick tip about that is you would want to.
Can you, Corinne, because is this two different things?
What's that?
Are we talking the same thing? Authorized user is the same thing as adding somebody.
It is.
Okay, I want to make sure we talk.
You take your card, you take your Capital One card, and I add you as an authorized user, an additional user. I add you on there, and then one comes in the mail. I have one on my desk where my daughter just
Listen.
And then I add you, and then there's a card issued in your name.
Okay.
Now I don't send my authorized user card to my 20-year-old because we're not doing that. Okay. Right here. Okay. Now, if you're doing it with someone else, grandma, cousin, or someone, you want the card to be a low balance and you want it to never have had late payments, specifically if you're purchasing a home. Not one late payment. If they've had one late payment, don't go on it. If they have the propensity to have late payments and you're getting ready to purchase a home, don't go on it. That's not the card for you.
Corinne, say that one more time.
Yes. So when you have an authorized user card, you're on a card as an authorized user. That's basically your card. So their late payments are your late payments. So if you're picking and choosing to get on a card, it's not yours. Why would you absorb poor history? You need it to not have any late payments. You need it to have a low balance. You're not going to get on $1,000 card that's at $999.99. It needs to be very low, like around $300, $100. And it should be one of the older ones. You want some time, some history. So you want an older card. Yeah.
Wow. That's awesome. That's awesome. So now, thanks for your question. We appreciate you. Keep putting questions in the bottom, and we'll keep answering them even after we go off live. We want to be on time today. We want to be timely people, start on time, end on time. So just keep putting your questions in as you're watching, and we'll definitely get to your answers as much as possible. Hopefully, Corinne can stay on. I don't know if she can, and maybe in the queue. So if questions come up, she can answer them for me, and I can pull her on right at the end. I don't know, but we'll see. Now, I want to get into the nitty gritty of things. I want to get into the nitty gritty of things. With something popular that we talked about the last time we spoke was the 5 factors to credit. The 5 factors to credit. And so I'm going to let you take the reins, and I'm just going to sit back and listen and learn. Please help us.
So I got 10 minutes, right? I'm going to do it lickety split. I'm going to make it real poignant. All right. So the 5 factors of credit are broken down into percentages, and these particular percentages are going to be your FICO percentages. Okay. There's a difference between FICO, which you'll find on MyFICO, Experian, and a couple of your banks, and all your lenders are using this. And what you'll find on Vantage, which is Credit Karma, Credit Wise, Credit Sesame. You want to focus all your life on FICO. So these percentages are for FICO. We're not even going to talk about the Vantage percentages, okay? So 35% of your credit is your payment history. And so that's the most important. You want to keep your bills on time. Whenever you see late payments, charge-offs, collections, bankruptcies, those are pulling down that very huge percentage, which is 35%. So I always have budget tips. Your budget tip for that is to put it on auto pay. We literally just had a client not pay $4 at Fingerhut, just got busy, forgot to finish the program, missed his $4 Fingerhut payment because it was not on auto pay, was in the middle of construction, his scores went down, he lost his deal, was not able to close on his house. So definitely auto pay, auto pay, auto pay. We're all busy. I'm talking to y'all. I'm not paying bills right now. All right, your payment is important. Think about it. You're buying a $500,000 home. Folks want their money on time. On time. And I've been in stages of my life where I've skipped it, done it. I didn't understand the importance of on time. So I'll stress that a lot. Next 30% is your debt ratio. How much you owe on your credit cards. So if you have $1,000 credit card, you're going to want to keep that as low as $10. The internet version of that utilization is usually 30%. That's for average people. We're on Dana's team. We're exceptional. So we're going to keep it down. We're going to keep it down to 10%. And just because you joined us, I'm giving you a special cherry. And if you need to really take it to the top, you want to keep it at 2%. That is as many points as you can get in this particular area, 2%. Okay.
Wow.
Quick disclaimer about that, because I know that AJ's coming up after me. Make sure you have money for your earnest money deposit and your inspection and your closing costs and all that. So you don't want to overpay your credit cards unnecessarily and not have capital. But if you can swing it, 2% is going to get you that gold star in this area of the debt ratio. Okay. So you want to keep it below 10%. And then you also don't want to pay it completely off, this credit card. You want to keep it no lower than 1%. So between 1 and 10% all the time.
Wow.
Okay. Zero is not bad. Like, you're not a bad person, but they don't give points for you not using your credit once again. See how it's all coming together? You don't have a card, you don't have credit. You're not using the card, you don't have credit. These folks want to make money. Keep that card between 1 and 10%. And the next is the length of history. That's where the authorized user comes in, Miss Ebony. She's a prophet. She's a prophetess. The length of history has to do, the place where you can help yourself with that is finding a good authorized user person to put you on their credit. And I just had my father add me on his 34-year-old credit because my length of history is shorter because I've had a lot of accounts closed. Okay. So length of history, 15% of your credit. And you want to keep your cards open forever. You're not closing them. You're not paying off for closing them. You're keeping them open. The older, the better. And in the story of purchasing a home, it's longevity of telling people that you've been doing well with credit. You want that longevity.
So you can take on somebody else's credit history if they How did you say you did that again?
So we're going back to Ebony's point about becoming an authorized user. So say in my case, I did all my other percentages pristinely. I did all the work that I was supposed to. I paid it down. I paid it on time, yada, yada. The one area that I can't willfully affect on my own is time. So you kind of got to cheat a little bit. And that's where becoming an authorized user, you're borrowing some of that time. So I went
Wow.
and found a good creditor, a good,
Time and credit.
yeah, I went and found a person with those factors I told you earlier in answering the question. My father's cards are old. They are paid on time. He's never had a late payment, and the balance is low enough for my comfort level. So I'm borrowing the advantage of his 34 years to help this 15%. It's a little trick. Okay. The fourth area is 10% is new credit accounts. Basically, you purchasing a home, you need to keep those inquiries to null. Ask questions. I know that Dana is an awesome realtor, and I'm sure she's told a client before, you can tell me anything, and you should. The same thing with going to purchase something new in the midst of this whole game is you don't want new inquiries and new accounts and new cars and new credit cards. You apply for the home, you get pre-approval, and then you run out and go buy a new car, and the deal is gone. Okay, so through this whole process, you want to strategically, if it's to help your credit,
Yeah.
holler at me first, and we'll figure out if that's a showstopper or what it is. You know, if you're applying for a cell phone, you might be okay, but just don't go buy a whole car right before you get your car keys. You can Uber over to the to the car dealer from the closing.
Yeah.
And lastly is the mix of credit. We're telling a story. This is a book of who you've been in the past and you're likely credit wise and who you're most likely to be. So your book needs to have some diversity. And so a good mix of credit might look like a couple of major credit cards, Visa, MasterCard, maybe a Macy's card, a department store card, and then either like a student loan, a home loan, or a car loan. You need to show before I start paying this $400,000 back that I'm versed in diversity of my credit, of doing a couple different things well and not just one thing.
Okay.
Whew, I'm done. I did it.
You're doing good. You did good. You did good. I do have one more question for you.
Yes, ma'am.
Let's talk about. I'm sorry, I keep going back to authorized users.
Yeah, sure.
But can you, if you put somebody on, can you get them on?
Yeah, you can take them off and they can take themselves off. That's why I like it, because I can call and say, whoa, you know, like say you broke up with somebody and your ex-girlfriend forgot to take you off and she's not handling her business well.
Yeah.
You can call yourself and say, I need to come off this card.
Okay.
You might not even know that somebody put that. You don't need permission to add someone to your card. So you might not even know you were added.
Okay. All
Yeah.
right. Good.
I had a beautiful authorization story where one of my lenders, when she went for her first credit card, she had a 720 because her father had put her on his cards when she was 16. So her credit was marinating before she ever got in the world, and she didn't even know she was there.
Wow. Wow. Well, listen, I am ecstatic about everything that has happened here today. I am grateful that Corinne, the credit guru, which has upgraded her title, so we upgraded it below, is here with us and is doing an awesome job for so many people that struggle with the credit. So I want everybody to make sure, I want everybody under the sound of my voice to make sure that they are moving forward and making things happen when it comes to your credit. Get it straight, get it cleaned up, get it accurate, but most of all, get it healthy. Corinne, do you have any final words? We got 1 minute.
My final word is to get started. It's not as hard as you think, and if it's good credit, it can be better, and if it's no credit, it can be good. So just get started and you can have whatever you want. This whole process is gonna grow us bigger. So from top to bottom.
All right, guys, you heard it from the best, the guru, the best in above all the rest. www.curemycreditscores.com. 1-800-707-5022. Again, 1-800-707-5022. Corinne, it's been real. I will not say goodbye, but I will say see you later.
Yes, ma'am. Thank you so much.
All right, bye-bye. Well, Corinne came, and if you missed it, you just missed it, guys. She was amazing. She was awesome. She had answered all of our questions. If there are any questions that are in the chat, we will definitely make sure that we answer those questions within the next day or so. Also, you can also message us outside of this opportunity in order for you to get what you need. We're going to take just 30-second break, and then we will return, and then we'll be able to invite on our next most important guest for the evening. Thank you so much, guys. Wow, that was a lot. That was amazing, and I'm so grateful for everybody that has been on so far. Ebony Nunnally, our amazing realtor on the core team. We create exceptional experiences that transcend the real estate industry, and then none other than Corinne Hamilton came on live, and she knocked everything out of the ballpark for anybody who is looking to get their credit together, whether they're buying a boat, a house, anything, a trailer, whatever you want, everything, jewelry, whatever it is that you have on your heart to buy, that credit has got to be snatched. I'm saying that jokingly, but very serious, that it's important that you give her a call, 1-800-707-5022, Corinne Hamilton, 1-800-707-5022. Well, now I have the opportunity in about 2 minutes to introduce our next guest. Before I bring him on, I don't really need to give him much of an explanation because he's been doing mortgage lending for over not 25 years, not 28 years, ladies and gentlemen, but 30 years. Our next guest has been doing mortgage lending. He's been changing lives. He's been getting people into homes. He's been making things happen, and his clients absolutely adore him. AJ is his name. He's been helping families purchase and refinance homes. Over 30 years, he is married to none other than our most amazing Ebony Nunnally, and they have 4 children. He has a degree from Old Dominion University. His hobbies include basketball, tennis, and he loves fishing. He has been a member of the Omega Psi Phi fraternity since 1989. Let me hear for Omega Psi Phi. He was recently elected as a board member for the Veterans Associations of Real Estate Professionals. And guess what, guys? If you are serious about purchasing a home, if you are serious about securing your money in order to purchase a home, we want you to make sure that you get in touch with AJ Nunnally. Guys, we're going to take a quick break, and then we'll be right back. Thanks so much. Talk to you in a minute. All right, we are back. I love those little 30-second breaks without further ado, I'm going to bring on AJ of Apex Home Loans. Everybody give a hand clap. We're so excited to have him here. This is the first time he's ever been a guest with us, and we are so honored, AJ, that you made a decision to take time out of your busy schedule to come and be with us today. How you doing today?
I'm doing well. I'm doing well. Thank you for the invite. I'm very excited to be here, and I definitely enjoy. You bring so much energy, so it's great to be here. It brightens up my day.
Awesome. My energy actually reflects off of all my guests. So
Oh, yeah.
hopefully I'm hyper. Hopefully we can make you hyper. So me and AJ have done a couple deals together, and we're practically family. In fact, Ebony is an intricate part of the core team, and we could do no bring AJ online to be a part of our process. So I'm excited about this segment because today we're going to talk about securing the home loan, securing the home loan. But before we get started, we definitely want more people to come online. So I have just a couple of quick little questions to AJ that came up in my mind while we were preparing for this production. The first question I wanted to throw out at him is, how has COVID-19 affected the lending industry? How has COVID-19 affected the lending?
As you know, I guess you would say the main things that we've seen over the last, almost 8-9 months, of course, with appraisals. Appraisals have to go into the property, so they, have concerns in reference to going in the property. So we've been, able to do appraisals without having to go inside the property. So we're able to, do inspections from the outside, not go in. Sometimes we can't even get appraisal waivers. Also, guidelines have tightened up with, people, credit score requirements went up a little bit, starting to level off now, but we saw initially that, the lenders really tightened up in terms of what they will allow us to do. And what we're finding is that people who were affected by not being able to work, their year-to-date income may be lower. So we have to take that into consideration. So it could affect how much you qualify for. Now, if you're salaried, then a lot of times we can, we'll be okay. But if you pay hourly, they're still requiring us to look at your year-to-date income. And if it's lower than what it should be, we got to use a lower amount, which could affect how much you can qualify for. So we've seen all those things, come from COVID. And it definitely has been an effect, but we're moving through, and hopefully it'll be behind us soon and we can get back to normal. But we're still able to help a lot of people purchase homes during this pandemic.
So tell me a little bit more about, can you go into, like, how does that differ from before? Like, before, did you guys actually have to do that much, I guess, back office extra steps, or are they just a little fearful to loan money to anybody under a certain credit score?
Well, the main thing that we have to make sure that employment is stable. So if it's a situation where you're self-employed, I had a couple of my clients that were barbers, we had to be able to show that they were back to work and that their income had stabilized. Whereas, before COVID, we just get tax returns, year-to-date profit and loss, and we were okay. But we haven't, verified that they at work, meaning like a third party, or, if they own the barbershop, we got to be able to call, prove that the shop is open. We got to see deposits, seeing that they have clients coming in and actually, deposits going into their account. Whereas we didn't have to do all that in the past with self-employed borrowers. And with our hourly employees, the same. If we get a pay stub and the hours are not 40, then we got to be able to show that they're still full-time, not part-time, and that their income is likely to continue. And so, yeah, they put things that, where we got to make sure it's stable.
Okay. All right. So, I heard you kind of reference the appraisal issue. So what measures are they taking now for buyers? Are they even going in the houses, or are they still doing drive-bys?
They're doing drive-bys. If it's a situation where the buyer wants something to be inspected on the inside, or to make sure that, things are going to meet, especially with FHA, the guidelines, for the house, then they can go in. Some appraisals are refusing to go in. So if that's the case, we have to find someone who's willing to go in. And some of them are starting to ask for like additional funds for hazard pay if they have to go inside the property. So it could mean a higher cost on the appraisal.
Whoa, so that'll increase the appraisal cost to the buyer?
It could, yeah, it possibly could, yeah.
Okay, wow. And tell us I know this is not on our schedule, but can we dive into why is the appraisal important to the buyer and how does it benefit the buyer?
It's important in two ways. The main thing is it's going to make sure that the buyer is not paying more than the house is considered to be worth. The appraiser is going to let the buyer know what the property is worth. A lot of times people get confused with the assessed value of property versus the actual appraised value. The appraiser is going to take into consideration the condition of the property and the houses that are near the property that have sold that are similar, and they're going to come up with a value for that property. Also, on like the FHA and the VA appraisals, they're going to look at the condition of the property to see if there's anything that they see that concerns them about the property, such as the roof. They see water leaks, things of that nature, so that way the buyer is aware the condition of the property. So those are the main two things that you're going to get from the appraiser. But if we always, I know you recommend 2 home inspections, because if you're concerned about the condition of the property, the appraiser is just going to give you I guess you would say they're not certified to inspect a lot of things. So they're just going to give you their opinion. Whereas with a home inspector, they're going to be more qualified to give you the real condition of that property.
Okay. So let's now shift over to, since we were talking about COVID-19, let's talk about interest rates, and let's talk about let's figure out how are interest rates and how important. Well, let's start there. How are the interest rates right now?
They're great. I've in my almost 29 years, I've never seen interest rates this low for this long. So most programs you can get interest rates below 3%, which is unheard of for a mortgage for 30 years. So it's a wonderful time to purchase or refinance real estate.
Okay. So the rates are, I mean, I've been seeing actually between, I actually saw something the other day. I saw 2.5%.
Yeah, well, no, like I said, definitely I've seen 2.5, 2.25, which, like I said,
it gives me chills considering when my parents bought their first home, I think they paid like 17%.
Yeah.
I mean, it's really high back in the day.
Yeah, that's before my time, but I can remember rates around 10%. But yeah, it's definitely, like I said, and the great thing is it's going to help people, families, be able to lower their payments if they already own a home. But a lot of times it's going to help the first-time home buyers and people who are interested in buying a home to be able to get into a home for a lower payment because the interest rates are so low.
Right. And I don't think that buyers really understand, or prospective buyers really understand how important interest rates are. So how important is a lower interest rate? Like, can you give us like an example of how important it is to have a low interest rate?
It's a difference of, like, say, for instance, a house, say, of $300,000, interest rate of 2.5% versus an interest rate of, say, 4%. It's going to have a difference of about $200 or $300 a month in your payment.
Okay.
You buy that same home today, which would have cost you last year, say $1,800. This year it'll be $1,400.
Okay.
And because of the interest rates being that much lower, so it's going to save you money monthly on your payment. So it's going to put you in a position where it's, like I said, the payment's going to be more affordable, and it could allow you to buy more homes than you could last year and have the same payment. So you could get that dream home and get it at the payment that you're comfortable with.
Okay.
So it's like, a great opportunity to become a homeowner.
Okay. Oh, that's awesome.
And like Corinne was saying too, with the credit score, that's something, like I said, you can get a mortgage, with a credit score, say, 620 or higher. But the higher your credit score, the better your interest rate, which is going to transfer into a lower mortgage payment. So you definitely want to do the things that you all were talking about in the earlier segment in reference to things that you can do to improve your score, because it's going to not only get you a better interest rate, lower payment, it also is going to get you better quote with your homeowner's insurance as well. So it definitely is going to have a positive effect on your whole mortgage, PITI, principal, interest, taxes, and insurance, if you have a better credit score.
Wow. Okay. So that leads us right into our next question, which is, how important is a person's credit profile? How important is a person's credit profile?
It's going to be very important, because like I said, the higher the credit score, we consider 680 and above to be excellent credit. But like I was saying, you can purchase a mortgage with a 620 or higher credit score, and some companies are still, maybe even go a little bit lower than that. But keep in mind that if you have scores that are lower than that, then you're going to have a higher interest rate, which is going to give you a higher payment. So you want to, have your credit in as best shape as possible when you purchase, because it's going to allow you to, purchase a home and keep the payment more affordable. So it's very important. And I know you have people we're going to, we definitely going to do whatever we can. If we see things we can do to help you improve your credit, to get it higher so we can get you a lower interest rate, we're going to make suggestions when we're doing the pre-qualification. And I know Corinne will help with that as well. So the key is, like she was saying, when you're going into the process, don't close any accounts, don't open any new accounts, do not max out your credit cards. Make sure everything's paid on time, because I know a lot of times people, get excited and they go out and like, I'm buying a house, I want to go get this front. No, don't go get any furniture. Well, they said they're not going to run my credit. They're going to run your credit, and we're going to find out about it. So yeah. So we just want to make sure that it's a smooth transaction for you. And like I said, we all have the same goal, to get you into your home.
Until they can run your credit all the way up until the day of closing, right?
The day of closing. If we see, because we get alerts when you have inquiries. So the underwriter gets the alert, and that'll say, okay, we're going to come back and say, okay, we see that you had an alert when we use Capital One, because I heard it earlier. And we're going to ask you, did you open a new account with Capital One? And, of course, you're going to say yes or no. And you're going to hopefully be honest. And if you open an account, then we got to verify that balance on that account, the monthly payment, and it could affect that you qualify. It could be a situation where, in the past, I've seen people buy cars before they close, and it keeps them from qualifying. So they go out and get a new car payment, then they can't close on their house. So you don't want to do that. You want to wait until you are in your home before you make any purchases, especially large purchases.
Well, what about people who finance a whole bunch of furniture for the house?
Don't do it.
Yeah, it's a very scary situation.
Yeah, it could keep you from being able to buy the house. You have to sell the furniture to be able to qualify, and you don't want to do that.
Yeah. So credit profile also includes not just credit, but it also includes the ability to be able to pay a down payment or savings. Don't they have to have some sort of savings? Or they're not giving out loans for people that don't have savings, right? It's credit.
You have some savings. You do have programs that offer down payment assistance, but what we're finding, especially in COVID, underwriters are wanting to see some reserves. They want to, they don't want a person to get in the home and have $20 in the account, because they know that if something happens, you can't make your mortgage payment. So they like to see reserves, not that we're going to use them, but they want to see you have a cushion so that if something happens, you're going to be able to make it a few months. Say, if, for instance, you get COVID and you're out of work for 1 or 2 months, be able to make that payment for a couple of months until you're able to get back to work.
Wow.
All of those things they're looking at and taking into consideration now.
Yeah. And it's very weighty for a buyer for a buyer to really kind of pull it all together. And that's why I like the whole team of the lender and the credit specialist and the realtor and the appraiser and all these different people working together to help get each person to realize their dream is their dream.
Right. Like my grandma would say, it takes a village. So it definitely it takes, and it's good when we can all work together for the same common goal, and it's to help someone, and it's to help a family become homeowners. And as we know, this is the way for us to be able to build generational wealth. Real estate is still a sound investment, and it's something that it's deeded, so you can leave it to your family, and it's a great asset to have in your portfolio.
Absolutely. Absolutely. Generationally, a legacy is important.
Very important.
And it actually gives you leverage. It gives you leverage. I know that, when you own homes, people tend to lend you money or give you a card to be able to purchase things for the Home Depot or to get a deck or whatever the case may be. People have trust in you when they see that you have taken out a loan as expensive as it is to purchase a home.
Right. It shows stability because they know that if you purchase the home, then the likelihood of you being in that place is going to be, it's going to be longer, meaning that, you're going to be there for a while. So they know where to find you, one, and it shows that, it shows stability. And that goes very well when you're looking at applying and obtaining credit, because that's one of the first questions they ask you: are you renting or are you owning?
Yeah.
And it carries a lot of weight.
Yeah, absolutely. Now I did have just a few more quick questions because I know we're running out of time, and I don't want to monopolize all the time with my banter. So we talked about interest rates. We talked about the lending market, and we talked about quite a few items, credit profile. Now we want to ask, can you explain what people, a lot of people run around and say, debt to income ratios, and the average person doesn't really understand how that,
Right.
That's how that works.
Yeah, with debt to income, when we qualify a person to purchase a home, what we're going to look at is you got what we call the front ratio, which is your housing ratio, and we're going to look at your total debt, which is your housing ratio plus all your other expenses such as student loan debt, your car payments, your credit cards. And what we're going to do, we're going to take a percentage of your gross income, and your gross income percentage cannot exceed that amount for your housing, and it cannot exceed that amount for your total expenses. Say, for instance, if you make, say, $5,000 a month, we're going to look at the $5,000 and we're going to say, okay, at $5,000 a month, then your housing payment needs to be about 33% of that, which, and that's what we're going to say you can, qualify for in a mortgage, which, is about $1,600, $1,800. And then we're also going to look at, okay, you have a car payment. Do you have student loans? Do you have credit cards? What other liabilities do you have? So we're going to say, okay, your total debt to income ratio, if it's $5,000 a month, we're going to say 50%, 45 to 50%, depending on the program. So that's around $2,500. So that means that your housing plus your other expenses cannot exceed that to get loan approval. So if you have a lot of liabilities, a lot of debt, and a large car payment, then even though your front ratio may say you can get an $1,800 mortgage payment, if you have $1,000 car payment, then that means that we have to take $1,000 off of the $2,500, which is a $1,500 mortgage payment. So all of your liabilities are going to be taken into consideration, will affect how much house you can qualify for. So that's why we want to try to make sure that we buy the house before we buy the car, if it's a situation where you don't have a car payment. Because when you're buying a car, they don't really get into your debt to income. They just look at it if you got decent credit or you'll be trying to pay for it.
That's right.
With the mortgage is not that simple. We're gonna, hold to those ratios. And if you're getting like down payment assistance or going through one of the first time home buyer programs, they're gonna look at your net income versus your gross, because they're gonna look at how much money you're bringing home. Also, they're gonna have a lower debt to income threshold. They're not gonna let you go as high if you're not putting down your own money. So all of those things have to be taken into consideration.
Well, we have a good question online here. It says, when assessing debt to income, is rent included in that assessment?
No. When you move into your home, the rent will end. So yeah, no, we don't have to use your rental. We do look at your rental history if you don't have a lot of credit to see how you paid your rent, because that we can use that as one of your creditors to help qualify you. But no, it will not be counted in your debt to income. But that was definitely a great question.
Yeah, it is a great question. And so our final is we would love for you. We would hate for you to come online and not share some of the great mortgage programs and down payment assistance programs that you have for new home buyers or home buyers in general. Could you just take a couple of minutes and just really take time out to break some of your programs down for us?
Sure. What I'll do, because is four basic mortgage programs, and then the other programs, I guess you would say, are just spinoffs of those programs. You have FHA loan, which is the federal housing, as you know, one of the popular programs for first-time home buyers. You have VA loans, which are for veterans. You have USDA loans, which are, you know, programs 100% financing, no money down if you're buying homes in rural areas. You have to, the property has to qualify for that program. And then you have conventional financing, which is one of the standard financing. Each state locality is going to have first-time homebuyer programs that they offer. Maryland, the largest one is the Maryland Mortgage Program, which is short for MMP. Then you have a federal program, the Federal Home Bank of Atlanta, which offers grants. Right now they're out of funds, but they should be getting more funds probably in the first quarter of next year.
What's the name of that?
That's the Federal Home Bank of Atlanta. They have a grant, and that normally comes through banks. It runs normally, they get funded normally February, March, and they normally run out of funds June, July. They have a certain amount of funds that's allocated per year. Maryland also has the Pathway to Purchase. Virginia, number one program is VHDA. It's Virginia Housing Department Authority. That's a really good program in Virginia. DC, you have HPAP and you have EPAP. Those are some of your first-time home buying programs. And the good thing with FHA, that's pretty much a federal program, so that can be done anywhere in the United States. And same thing with VA.
Can you go back to the Virginia ones for me real quick?
It's called VHDA, and it's a Virginia housing. And they also have it's V is Virginia, then housing, and then it's Development Authority for VHDA.
Oh, VA.
And then you have in Virginia, you have HOME, which is Housing Opportunities Made Equal. They offer down payment assistance. And like I said, DC is different. They have HPAP and then EPAP, which is the housing programs there. But yeah, like I said, it just depends on when you purchase a home. We'll be able to determine which which program and which grant that you may be eligible for. It depends on which state or if it's in DC. But the good thing is we can help you in any of those areas, and we would love to help you in any of those areas.
Awesome. Well, I don't. I think I see. I don't see any other questions online, and I don't have any other questions for you. I want to thank you for coming online today. I'm actually going to bring everybody on, and this is a little different than usual. But StreamYard, thanks StreamYard for being so amazing. We've had really good reception today. Haven't had any interruptions, and I'm grateful for that. I'm not sure where my favorite girl Ebony went, but I'm not going to bring her on. She must be preoccupied. Ebony, we appreciate you wherever you are. Okay. Add her in. Ebony, we appreciate you coming online today for home buyers. You must be in public. I see you standing in front of the hairdresser. You have to beautify yourself for your husband. That's important.
Go ahead on, Dana.
Comes first, girl. It comes first. So you have to secure that bag, right, Ebony? You have to secure
Yes, ma'am. Yes, ma'am. Absolutely. Yes.
So, man, we love you forever. You will forever be a staple at the core team with Century 21. We appreciate all that you do, all that you've done for the community. all that you do to make everybody else's life amazing. AJ, man, you're like family, man. Um,
Oh,
you're like a brother of mine. Me and AJ, man, we go back and forth. We talk, laugh, we cry. We go through what we have to go through to make sure our clients get what they need. And I think we can say that about everybody on this call. We love real estate. We love making our clients successful. We love seeing our clients prosper. And just as much as we always make sure that everybody else prospers, guys, it's my goal and hope that everybody on this call will prosper and live in good health as they help others and their souls prosper. I hope that we all continue to work in excellence and greatness. And before we go, I want to just reiterate that I'm Dana Coleman with Century 21 New Millennium of the core team, where we create exceptional experiences that transcend the real estate industry. Finish my sentences. Call us, text us, do whatever you need to do. Rewind this, share it, like it, watch it over and over and over again. And then when you finish watching, get up and do something. Yes, call Corinne, call AJ, call Ebony, call me. We are here to make your experience great. Guys, we're going to log off now. We've done excellent timing and we're finishing early. So we want to say hallelujah to that. We are not on time. I want to thank you guys. If you have any questions or comments that we did not share, again, we will get them to the correct person once the broadcast is complete, and we'll be able to help you with any questions that you may have. Thank you so much for joining us. Happy New Year. Happy holidays. Let's go 2021.
oh yeah.
Thank you. Good night.
Thank you. Y'all have a good evening.